Hello, friends, and welcome to my YouTube channel Simply Stocks. And today I'm going to talk about Havells India. A very expensive valuations currently, but the stock has performed well, and the company has performed well over the last 6 months or so. So let's understand about the business and let's understand what needs to be done. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Havells, please kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions in greater detail. Once you get that $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. For detailed market or company talk, you can directly email me and we can work things out. Now about the company. Established in 1958, Havells provides house improvement and consumer durable products. They are the leader in this space of water geysers, wires and cables, and top management with strong pedigree. And you need to understand that I remember 10 years back, Havells was recruiting big time, 10, 12 years back when we had that financial crisis. And I was trying to understand as to what the company does, because at that point of time there was not a lot of name of it. So a prime example Havells is, if you hold for a decade or so, that is the kind of, you can say, money you can make. At that point of time it was a 200-300 crore market cap company, and today it is of around 15,000 crores or something like that. It has come out with leaps and bounds, and from being just an wires and cables company, it has become a consumer durable company. They also provide fans, LEDs, kitchen appliances, water purifiers, and into ACs now, with after the tie up, after having taken over Lloyd, they are also providing air conditioners. So it is a very good play on the summer season also, not just the winter season. The company is a big conglomerate in this segment of white goods and appliances, and have operations in Africa, Asia, parts of Europe as well as Oceania. So not only here in India, so globally present the company is. If you look at the financials of the stock, then these are September numbers. I made this presentation about 3-4 weeks back. At that point of time, there were only September numbers present. So sales went up by around 10%, but look at the surge in profit. The profits went up by around 80% in the September quarter, and the reason being, the very less cost, operational efficiency, and cost cutting took place. So employee cost reduced, more, you can say, work online, and a lot of, you can say, shredding on the form of, you can say, extraordinary cost, or other cost, income, other expenses, etc., went down sharply, eventually coming out with very good profit numbers. So yes, sales were up, but look at the profit number, 80% surge to around 324 crores. High promoter and institutional holding with 10% free float. So huge institutions, FIIs, etc., are invested into the stock, and it has become the marquee name in the consumer durable space. So there is Whirlpool, Blue Star, etc., which cater to a particular product mainly, but you have something like Havells, which is into a lot of domain and doing well in water purifiers. They are doing well in ACs. They are into, and of course they had wires and cables and geysers, and the numbers speak for themselves. Even the December numbers have been pretty decent and upbeat, and with the economy, not that you can say, not that the economy has come back into shape and the company is doing well. So once the economy comes back full-fledged, probably in 3 to 6 months time, we will see the company do even better, and that is why the stock has surged so much from the last year March lows, and has surged so much from the September October, you can say, levels. Return on equity of over 20%, operating profit margin of 12%, which is improving day in day out, is also a very big positive. If you look at the performance of the stock, so stock performed well over the last 2 years. It has done extremely well, and over the last 3 4 months, it has done exceedingly well. Numbers have been robust for the last 2 quarters, not only in the last quarter, in the September quarter, but even for the December quarter, numbers have been pretty strong, and that is why stock is moving higher day to day. Return ratios around 18 20%, more than 20% is quite decent enough to invest into, and that's why HNIs get attracted to the stock. And the sector is coming back into focus after many years. So at least 2 3 years of lull because of the problems with the pandemic that we have had, and even before that we had issues with growth and the numbers being up and down, etc. Now that the real estate and infrastructure sector set to do well, I'm pretty much sure that white goods segment or home improvement stocks will do well. The only hindrance in here is the prices of the products which are set to go up from April onwards. I'm pretty confident that the prices will surge as ACs and other appliances prices will go up as the budget has shown. So that might have a negative impact on the sales. Otherwise, we could see a surge in demand compared to last year, because last year was a complete washout for ACs. Last year was a complete washout for all white goods segment for the June and September quarter. So sharp surge in profits are there, which could taper down a little bit, but eventually the numbers for FY22 would look extremely good compared to FY20. And stock has gone up over 2 times since the March 2020 numbers. In fact, it has gone up nearly 3 times from that March 2020 lows. So why I believe it is a buy on declines? It is a market leader in wires and cables, and you need not forget that. So yes, they are into other appliances, but wires and cables are the most important thing that are used when you construct a new home, and we are seeing that the new homes are built around us, and there is movement on the real estate sector. So I think that would be the biggest sales again coming in for Havells. Future growth looks imminent over the next 2 3 years. It seems like that this growth with respect to houses, with respect to infrastructure growth, etc., will be there for the next 18 to 24 months. Once economy recover, this stock is going to recover and do extremely well, as I have just mentioned. And a huge consumption play this is. So this is just not on home improvement, but on segments of, you can say, ACs, of geysers, of other kinds of products which are used in day to day life. So if there is people who are working from home, want to improve their homes better, use better products, etc., there's a more you can say vibrant working class that would come up as growth comes up. This is going to do well. So stock has run up, so wait for major declines to buy into it. Declines such as the one we are having at the moment, in which the market has fallen for 2 3 days. These are the kind of declines that we need to look at. Debt is extremely less, virtually no debt company this is. So what needs to be done? In my opinion, buy on major declines, or at least a 5 7 8% fall, and then keep on waiting for another such fall and keep on accumulating. Keep track of numbers. Hopefully they will set to improve going forward. Have a 5 year view at least, and it can become a multi-bagger even from here. So people may think that the stock has run up a lot, but I still believe that this could go even big from here over the next 5 6 years, and have less than 10% exposure into such stocks. So this was my video on Havells. Please like and subscribe my channel, hit the bell icon so then you get my videos straight away when I post it, and kindly support me on Patreon. Thanks a lot for watching.